Welcome to Strength in the Numbers. My name is Andrew Codd, accountant, author, and commercial finance entrepreneur, and it's my job each week to bring you leaders in finance and business and deconstruct with them their real stories, insights, and hard-won lessons into practical advice on the key strengths and qualities you need to remain relevant in accounting and finance today, as well as the steps you can begin to take to elevate the impact you make to have a fun, successful, and rewarding career in accounting and finance. Now let's go over to the show.
I think we have to keep trying to move further up the value chain. We spend still an inordinate amount of time making the data make sense. Once we've got, taking information out of one system, corresponding it with the data in another system, reconciling it with the third system, slicing and dicing it into formats for business users in a way that they'll understand it. And none of that activity is actually getting to the point where you're adding value. All you're doing is getting ready to add value.
And unless we do something about what Andrew mentions here, this is going to be the future of our profession, doing things to get us into a position to add value, but falling short. So thankfully, today's guest mentor, Andrew Parris, helps us deconstruct what we can do to deliver outcomes on time and focus on being a better business partner to our organizations. Also, the importance of external and internal benchmarking to help us not only be more efficient, but be effective too, and how to stay relevant into the future. And some cool ideas around there around being curious, discussing and challenging, and also a really great concept of the 3 threes. And I'll let Andrew explain what's involved there, but that's a very useful piece of advice on how to continue to remain relevant. Now, I've had the great fortune to catch up with Andrew on a number of occasions. We've met each other a few times at various conferences, so I'm really delighted to be able to share his insights with you on this podcast. If you do want to check out the show notes or key quotes, resources that Andrew mentions, or ways to connect with him, you can find more at sitnshow.com. And you might even want to recommend this episode to a friend or a colleague. You can do that by subscribing on all the major platforms: iTunes, Stitcher, SoundCloud, YouTube, and Spotify. And as always, really appreciate your interest in the show. So that's enough from me. So without further ado, over to Andrew and the show. So Andrew, welcome to the show.
Thank you very much, Andrew.
Hey, Andrew, I'm really excited to brought you onto the show and we get to chat again together. We've bumped into each other at a few conferences now, and I've always sort of enjoyed your presentations and the insights we sort of shared on stage and off. But some of our audience may not be as familiar with your story in accounting and finance. So would you mind maybe sharing a bit about your journey?
Sure. Going way back, I emigrated to South Africa with my family when I was 11 years old. So I did my secondary education in South Africa, then came back to the UK, not knowing really what I wanted to do with my life, and spent a couple of years. Some people have a gap year. I had a gap 3 years. Eventually established that I needed to go back to university, but in doing that, needed me to go back to South Africa. Couldn't get into uni in the UK at that time without doing A-levels. So went back to SA and qualified as an accountant. And the way the practice works over there, the profession works over there, is that you do a degree in accounting in order to become an accountant. So I spent 5 years doing a 4-year degree and a 1-year postgrad that then allowed me to qualify as an accountant 3 years hence. And then eventually came back to the UK. There was, again, was a bit of a surprise. Meant to come back here after having got married with my wife to come back to the UK for a couple of years, but we're here 20 years later.
I suppose on that journey, you probably worked with a few different companies. I suppose what's been your most memorable experiences working in either in practice or in industry?
Yeah, I've had a few along the way. I trained with BDO. I worked at PwC for a few years in a couple of different roles, and then spent 12 years working for various parts of National Grid. And more latterly, I've had 5 years working with Tarmac and now CRH, their parent company. I suppose the most memorable of all of that was one of the jobs I had at National Grid. They were building a liquefied natural gas importation terminal in Kent, and I was the head of finance for that operation for about 2.5 years while we were going through the most significant expansion. And we were spending approximately £1 billion over a period of 5 years, increasing the capacity of that terminal by 5-fold. It now is able to import and then put into the UK gas network approximately 25% of the daily gas demand in the country. And just the scale of the assets that we were building and then responsible for. There are 4 tanks down there, above ground tanks, each one of which you could fit the Royal Albert Hall in.
Wow.
They are truly enormous assets. And it was just inspiring to see the teams working together, the actual construction of it, the technology, the engineering, and then to feel like we were making a difference to the UK economy.
Wow, like on such something of huge scale. I mean, how do you keep track of everything all and keep on top of the numbers and actually make sure things get delivered on time?
Well, as with many things, Andrew, you have a good team around you. You need people to do their bit so that it all comes together. And we had a relatively small finance team, but we relied on a shared service center for the parent organization, National Grid. So we didn't have to worry about the transaction processing, suppliers' invoices, payroll, timesheets, all that kind of stuff. That was all done for us. So we could focus on being business partners to the business and taking the information generated by all of those transactions, understanding them, explaining them to our business partners, and ultimately driving decisions based on that information. But you had to see the wood through the trees, or see the trees through the wood. I'm not sure which way around it to describe it, but you had to see the big picture, but you also had to be ready to go into detail in certain aspects if needed.
I mean, you're hinting to some sort of key elements of what successful business partnering is looking like, but I like the fact that, you demonstrate you can have a small team, but business partnering allows us to scale our impact. I suppose, when we've been talking, one thing that excites me actually is the role you're certainly currently leading, because again, I think it's another area that finance could perhaps help you, leveraging business partnering skills to help be successful. Would you mind maybe sharing a bit about your current work with our audience?
Sure. So as of the beginning of this year, we're speaking in late 2019. So beginning of this year, I switched roles, having previously run the shared service center for the tarmac business in the UK. First time ever I'd been involved in shared services directly. I'd been a customer but not operated it, and that was really exciting and interesting. And we went on an interesting journey for 4 or 5 years there. But the new role, working for the parent organisation, a company called CRH, Cement Roadstone Holdings, Irish company that very few people have heard of outside of Ireland, but they operate in around 30 countries worldwide with around 70,000 employees in the building materials and manufactured product arena. And my role is now helping our European businesses consider the efficiency and the effectiveness of all of their functions. So HR, IT, procurement, finance itself, legal, marketing, sales, all those back office, dare I say, activities that every business requires. And the way that CRH is organized, we have many hundred operating companies, and each operating company operates relatively autonomously and has its own HR, finance, IT, procurement department. And that means that there are inevitably opportunities for them to learn from each other with regard to best practice, but also opportunities for them to collaborate for the greater good and to deliver efficiency and effectiveness.
This really excites me because I think, Andrew, the finance, we've often been seen as a cost center. And for me, I think, some of that has sort of spilled over into these other support or infrastructure functions that if we became maybe less siloed and started stitching things together and were able to learn from each other, we could actually start doing things better. I mean, I've just recently moved house, as some of the audience knows, and I've actually had to buy stuff off of CRH, one of the smaller companies. I can imagine there's probably some functions where there's a few people in and other ones that are much larger. So when you get these huge economies of scale, if there's silos within there, it could really trap or prevent better learning or better ways of doing things, preventing effectiveness and also efficiency. I suppose from a finance perspective, where have you found that your skills been able to help impact and help those functions actually become more efficient and more effective?
In the first place, Andrew, it's helping shine a light on things. Always, I think there's a role for finance to shine a light on the performance. So one of the ways we're doing that is by undertaking benchmarking activities. And benchmarking internally and externally. Not easy when we're all operating with different structures, different cost bases, different operating systems, etc., but necessary. So in doing that, though, we've been able to highlight where there are potential opportunities, but it's not as simple as just adding up all the numbers and comparing them with each other. It's also assessing the practices used in those individual operating companies contributing to the benchmark. And that means we can identify best practice, better practice, worst practice, and help introduce those that have got the better practices to those that don't, and give them an opportunity to learn from each other. And it's a truism that you only know what you know. And one of the observations that we found is that people thought they were good because they were better than they used to be. And that isn't the same as being good. That's just being better. So only by looking outside of your own arena are you able to see what good looks like, whether that's in other parts of our organization or in some cases outside our organization. We're able to understand what the art of the possible is. And my role gives me license to go and look for those best practices internally and externally and introduce them back into the business.
I love that, Andrew, shining a light, and again seeing the bigger picture. And I also like how many of us, I know I've been guilty of this myself, just because we started doing something better doesn't mean it's potentially the best way we could be doing it. No. So actually it just keeps the conversation going, and it gives people something maybe even better to aim for. So look, thanks for sharing. I do think we've got a tremendous gift in finance to be able to do that license to go do that. I do want to switch it up a gear and actually talk about maybe the future now with you, because I know it's a topic close to your heart, the future of finance. And you know, how do we remain relevant to that? And I just wanted to get your thoughts on sort of where do you think our audience should be going in terms of getting or having a more sustainable future in finance and staying relevant.
It's a topic on many of our minds, and I think it always should be. Whether it was 10 years ago, 5 years ago, or 5 or 10 years into the future, we should always be looking to the future. And I think the essence of it for me is being curious and being prepared to inquire, to challenge, to discuss, obviously within the constraints of whatever your role permits you to do, because you can't spend your whole life just contemplating the future and not delivering today. But everybody, I think, should be curious about what's happening around them, what's happening in other organizations, and where the future of organizational management, finance management, etc., is going. So if you're not curious, I would be concerned. Secondly, I think it's about interacting with other people. I've gone to many of those events. You've referred to a couple of them that we've been at together. But I've spent the last 4 or 5 years, I never used to do this, but in the last 4 or 5 years, I've gone to events with the deliberate intention of trying to achieve 3 threes. Okay. Meet 3 new people, have 3 new conversations, and hear 3 new ideas. Now, that might be all from the same person. It might be a new person with a new idea and a good conversation. But I'm not going there expecting to find a silver bullet or a magic wand. I go to these events connecting ideas together, validating ideas from other sources, exploring how other people are getting on with things. That point of interacting with other people, you can't just read about this stuff on the internet. No. Helps, of course. It makes the world a lot smaller having all that stuff on, my friend Google. Ultimately, you've got to get underneath those written experiences or the videos or the podcasts and actually have conversations with people.
Yeah.
So that would be my 2 things: be curious and talk.
That's really great advice, Andrew. Very accessible as well for our audience. I think those 3 threes are definitely within our gift, and curiosity. Well, that's something I think that separates the good from the great in finance. Those are more curious, sort of forces us to go out and ask questions and meet more people. In terms of those 3 threes, though, any interesting ideas that you've come across that you'd like to share with our audience?
Well, the first one was robotics, and that was some time ago. I remember seeing on BBC an article saying how the world of finance is going to be automated completely and we'll all be out of a job. And I thought, well, if that's really a potential future, I should perhaps understand that, because that's my career. So I spent quite a bit of time talking to different people, meeting vendors, speaking to people that have done it, that are doing it, understanding a bit more about it to then understand how we might apply it in our own business. And we have done in Tarmac. We started in 16 and then followed it through in 17 and 18. And right now we've got a relatively small fleet of digital workers, robots, bits of software, operating processes and tasks for us that relieve the repetitive, routine, and mundane activities from those that would prefer to be spending their grey matter on more meaningful activities. I wouldn't have known about this stuff, and I wouldn't have pursued it as an opportunity for our organization if I hadn't been curious and if I hadn't gone out and spoken to people.
That's really interesting. You just gave me the thought there, Andrew. Like, you know, we're talking robotics now and actually introducing it and having digital workers and potentially digital managers of those digital workers. You know, in 20 years' time, with looking to the future, I mean, who knows, right? I mean, robotics, having digital workers could just be a commonplace in most finance teams, and what's going to be the next thing for us, you know, to go do.
I'm sure it will be, Andrew. I have absolutely no doubt that it'll be commonplace. We think back 25 years at just around, like you and I know you can do this along with me. ERPs were just becoming the norm, and we weren't sure what they meant. My first accounting job, I had a 12-column cash book, manual cash book that I maintained, and I'm that old. Suddenly we had this technology that made things so different for us. And I do remember some of the conversations about, oh, it's a passing fad, it'll never work. Oh, you can't remove the wisdom of the accountant, etc. But now we can't imagine not doing what we do without ERPs. I absolutely believe technology is going to continue to develop at ever increasing pace. And the way we connect and use different aspects of that technology. We've just started using artificial intelligence along with robotics in the Tarmac Shared Service Center. We'll start using chatbots. We'll start using cognitive computing. We'll start using lots of different technologies that will just, by the time my kids are X years into their working lives, it'll just be, that's the way we do things around here. Think about how our personal lives have changed with the introduction of technology. The iPhone, how old is the iPhone? You know, but now can you imagine a world without a smartphone?
No, someone was showing me the other day how they were taking a photograph of their expenses and on their iPhone, and it was translating them into their, I think the name of the app was Expensify, and turning them into the ledger. I think they had to approve it. It recognized the characters and everything. I mean, like, I don't know about you, Andrew, my first ever expense claim was one of those paper-based forms. You know, and there was elements of cash and stuff. It's just crazy. The rate of change. And you said that was a great example with the iPhone. I suppose, is there any sort of other, I think you've got an approach to leverage the good things about the future. Is there any sort of other sort of thoughts about the future of finance that you might be able to share with our audience on how we can continue to remain relevant?
I think we have to keep trying to move further up the value chain. We spend still an inordinate amount of time making the data make sense. Once we've got, so taking information out of one system, corresponding it with the data in another system, reconciling it with the third system, slicing and dicing it into formats for business users in a way that they'll understand it. And none of that activity is actually getting to the point where you're adding value. All you're doing is getting ready to add value. And I think collectively finance spend far too much of our time doing that stuff. And then we get to spend a bit of time understanding it for ourselves and getting to the point where maybe we could add some insight. And then we get a very limited amount of time to actually spend time with our business partners, the users of the data, and give them the proposed actions to take to influence the performance in the future. And that relationship is the wrong way around. We could, with the technologies available to us today, I can only imagine what a greenfield organization, one of the businesses born in the cloud, that's been able to define its processes using all the available technology, how those finance folk are able to do what they do. it must be such a lovely place to work, that your data's at your fingertips. I described earlier on my role at the liquefied natural gas plant at National Grid, and how I relied on people to provide that information. But it could be so much easier for those people required to do that when the technology does it all for you.
Which actually makes for more meaningful work at the end of the day. I mean, there's probably only a very few people out there who actually enjoy collecting data, cleaning it, blending it, and it feels like you work in a cave sort of doing that. I think the much more sustainable work is being out there in front of the organization, understand what they have and want, what their value gaps are, and then go helping them close it. Much more proactive state. So yeah, so look, Andrew, great advice for our audience there.
I'd add one more thing, is don't just rely exclusively on your insight from being in finance. Understand the business.
Yes.
The trick is to convert what you see through the numbers into language and into action that impacts the business. It's no good saying, oh, well, your DSO's gone up. Okay, my DSO's gone up. Help me understand why that might be the case. Help me understand what I should be doing about it, and what I can do to improve the situation. And even with something relatively benign as DSO, you can't do that unless you understand the business that you're part of. You need to understand the market that's operating behind the scene or in front of you. You need to understand the peculiarities of the season. You need to understand the processes that have delivered that DSO. So have there been problems with the process? And you can't just take the numbers and think that you're going to know everything. You've got to reach behind the numbers.
I guess that, there was a lot of sort of areas to look at there. I guess that comes back to the curiosity point you raised earlier, and then also meeting with people as well to help find out those answers. It's not we're going to do that in a room on our own, right?
No, exactly.
So look, this has been really great advice, Andrew. But I'm curious though, what's been the best bit of advice you've ever received?
The best bit of advice I've ever received. Okay, I changed roles about 5 years ago. I had an executive coach for a brief period. We're still in touch today. We still catch up every now and then. And the advice she gave me was, you've got to line three things up if you want to get the most out of yourself in the work environment. You've got to find out what you're good at. And sometimes we don't really know what we're good at. We just know what we've been doing. You've got to find out what you enjoy doing. And sometimes that's even harder, because separating what you do from what you enjoy is hard. And then the third thing is, you need to find out what people are prepared to pay you to do. And if you can line all three of those things up, you're probably never going to work ever again, because you won't think of it as work, because you'll be enjoying what you do. It'll come easily to you, and people will happen to pay you for it. So if you can actually detach yourself from what you're doing on a day-to-day basis to assess whether you are good at it and whether you enjoy it, I think it's time well spent. I listened to Radio 2 in the UK, and Chris Evans was the radio DJ after Terry Wogan moved on.
Yes.
He used to say that if you find a job you love, you'll never work another day in your life. And it's that kind of thinking, that don't just accept what you're doing is all you can do. Be prepared to challenge, be prepared to reflect. I don't reflect naturally. I have to make it happen. But when I have done it, it's borne fruit.
That's great advice to received, and also I suppose that's a good example actually. Terry Wogan and Chris Evans, having to get up at that early ungodly hour to do a radio breakfast show. I remember it well, but to do that well, and they were both brilliant at it. You have to enjoy what you're doing, and they were brilliant at it, and I can sort of see those sort of three things coming to fruit there. I'm sure they got paid handsomely as well. So, so Andrew, that was great advice. I suppose in terms of maybe some resources that you think might be useful for our audience, go check out perhaps a book or something like that. Would you recommend to our audience?
I tend to read quite a lot. I've just acquired 3 new business books, one of which is the book on Boyd. So John Boyd, B-O-Y-D,
yes,
the fighter pilot who changed the art of war. There's a number of books about him. This is the one that's written by Robert Coram. And I've not read the book yet. It's sitting in front of me. I haven't even opened it. The story goes along the lines of OODA loops. Mm-hmm. And OODA stands for observe, orient, decide, act. And my understanding is that this book will explain to me how he came up with this model and how the model helped the fighting forces he was part of succeed, but it applies in business as well.
Yep.
Because the quicker you go through that cycle, the OODA loop of observe, orient, decide, act, the better you will be in a competitive situation. You will get to action quicker than your competitor. And you will then go back through the cycle and you will learn from those actions. And it's, for me, quite a simple way of understanding how to succeed in business. Just don't be huge, don't be quick just for the sake of quickness, but go through a rigorous process of making decisions and acting on those decisions.
Yeah.
So that book, I'm looking forward to reading. It's been recommended to me. If I was to recommend books, the two I always recommend were by Dubner and Levitt, which were the Freakonomics and Super Freakonomics books. They were written quite a while ago, and they're real eye-openers on the power of the question and how data, when you understand it, when you take the time to understand it and correlate factors within that data, can reveal very, very interesting insights.
Great suggestion. And I was just thinking on that OODA loop, because I want to tie it back to something you said earlier. When you said about us moving higher into the value chain, that ability to observe, orient, decide and act, I think that's the next stage for finance professionals to go to, is not leaving it with just the advice and the analysis piece, but it's actually doing something with it, helping the business act, deploy it, and then learning with the business and then feeding it back into the entire process again. So I think that fits neatly to your concept of higher in the value chain. Yeah, definitely. So Andrew, look, great recommendations there, and I thoroughly enjoyed the Freakonomics books as well. They're very good reads. And I suppose if some of our audience wish to continue the conversation, where's the best place to connect with you at?
LinkedIn. I'm one of few Andrew Parrises on LinkedIn. I'm the only one with ginger hair that's related to the Midlands Shared Services Forum. I'm on Twitter as well, Andrew J. Parris. Those are probably the best two.
Awesome. We will put those links in the show notes. Now, normally I ask for some parting thoughts, Andrew, and I'll get there, but I'm not letting you off this call without asking the question with the recent Rugby World Cup between South Africa and England. Who were you cheering for?
I was cheering for the boys in green, and not your boys in green, my boys in green. I moved to South Africa as a preteen and went to school where rugby was what you did, unless you just moved from England. Because I played one game and was, no, I'm scared, I'm not playing rugby anymore, I'm going to go play hockey. But I fell in love with rugby at that time. Some of the 95 World Cup winning team were contemporaries of mine at that school or the school down the road. I was fortunate enough to be at the opening match of the 95 World Cup. Wow. I was living in South Africa throughout that World Cup and eventually saw us win that World Cup, which was astonishing. And then to do it again 12 years later, and now again another 12 years later, I was thrilled. My whole family were wearing the Springbok colours that day. But it was we were going to be away, because if I had a second team, it's England, and having been born here. And they played awesome. They really delivered against the All Blacks. But I think they peaked one game too early. And as Eddie Jones has been saying recently, he didn't freshen the team up on the day, so he didn't switch it up. I also think South Africa just had the best defence. The best defence wins the Rugby World Cup. It's happened every single time.
You know, I always trying to draw analogies, but I can't help but feel sometimes between finance and rugby that, finance offers a good defense framework for the business to move forward from. So, I'm probably clutching at straws there, but no, I think with the controls and compliance piece, that's a good defense against leakage. If you look at the value equation, the MPP, well, and then it's about going forward.
Yeah, ultimately that's why finance existed in the first place, and we're still responsible for financial control, for reporting performance, for being the conscious of the business. That stuff doesn't go away. So your boys in green, though, Andrew, they peaked probably about 6 months too early.
Yeah. We must be kicking ourselves. We beat New Zealand, the All Blacks, we've beaten South Africa, and then when it really mattered, just fell a bit short. Peaked a bit early, as you said. But look, South Africa thoroughly deserved the World Cup, and I really hope. I just thought their captain was very dignified and humble in his speech afterwards. I thought that's amazing.
Yeah, the coach as well. There's a fabulous cohesion in that squad now. They weren't. When Rassie came back into the fold 18 months ago, he picked up a team that was in disarray, and there was no cohesion. But he's managed to bring them together as a team. And it's true in sport, it's true in work. With the right leadership, with the right attitude, with the right cohesion, you can achieve great things.
Yeah, I think that's a great parallel to draw between what we just witnessed in the Rugby World Cup, and I think how to have a good future in finance with all the change and stuff that's going on. Like rugby's had to evolve over the years, and I think finance will have to evolve too. I suppose, in terms of any other parting thoughts, Andrew, would you maybe have any of those to share with our audience?
Be positive. Always try to see the positives in things. It's held me well over a number of difficult times in my life. Yes, it can be scary, it can be daunting, it can be, oh my God, how am I going to cope with this? But there's always a light at the end of the tunnel. All you've got to do is look for it and find it and then follow it. So just try and stay positive.
Great advice, Andrew. Well, look, Andrew, thank you so much for coming on the show today. I really appreciate you taking us through your journey, the work you did with the National Grid and the finance team there, the point about the curiosity and also going out meeting people, the 3 3s, our conversation about the World Cup and the future of finance, and a great leadership there. So look, really appreciate you coming on the show today.
Well, thank you for inviting me, Andrew. It's been fun.
So there you have it. Hope you enjoyed today's show. If you'd like to know more about our guests today, their bio, and follow up on the resources mentioned during the show, you can find all the relevant links and more at sitnshow.com. There you'll also be able to get access to earlier shows, read the latest blogs. There's also an opportunity to subscribe to our newsletter, which will give you heads up as to when the next show is coming out, latest events, news, and anything that's going to be relevant to help you have a fun, rewarding and successful career in finance and accounting. And just before you go, we really appreciate your feedback. If there's something we can do better on the show, something that's not working, or something you'd like to see, even a guest you'd like for us to invite onto the show, someone who you think might be able to benefit you more and also the rest of our community, please let me know. You can email me. I'm at andrew@sitnshow.com, or feel free to connect with me on LinkedIn. Just drop me a message so I know how you found me and we can connect. And really, it's our community that'll make the show. If we keep engaging and driving each other on, we'll keep on building our strength in the numbers. When all is said and done, if we can do the numbers better and finance better, we'll create more opportunities for ourselves, our friends, our families, our communities and our businesses. So until next time, have a good rest of the week, take care, and let's keep building our strength in the numbers.